Hello and welcome once again to this video. It's me, Charles, and so here in this video we'll be working on creating the cash flow. Now this problem, we've been solving it from the onset. It's actually a real estate development project, and that's covering 4 years. One of those years, that's the construction period, which is 12 months. And you have all of the inputs here, and we're working with the inputs. We've worked on all of this. So if you're watching this video for the first time, we've got a playlist, and you have the link of the playlist below. So we've worked on much of all of this. So for today, we're actually going to be looking at the cash flow. We're creating the cash flow statement. And so if you look through here, we've had much that has been modeled already. And so this is the financial statement, but in the monthly form. So right now we want to come up with the cash flow for this. Now the cash flow is not like the regular one that we might meet in service businesses and all of that. This is just going to take into consideration that which we do in property or real estate management. So I'm just going to come here, and then we'll just call this cash flow. Just call this the cash flow. Okay. And right here, what we're going to do is we're going to try to derive what is the net operating income. Our net operating income is going to encompass the following. The first thing we want to bring out is we'll bring out EBITDA. Okay, and we already have that. I'm just going to bring this one here and drop it here, and here we already have that here. So I'm just going to link to that. And then the next thing that I'm going to do, we don't need to have this bolded. I am going to bring just the expense items that we need to take out of it. For example, we do not need to take out depreciation. That is not a cash outflow, but it's just something for reporting. But we definitely need to take out our interest, because interest is one of the cash outflows that takes place here. Okay, so I'm also going to just link to that one too. And then corporate tax. So we need to take out corporate tax, or whatever taxes that there might be, we'll need to take them out. So if we do this, what we actually have interest, and this one is going to be our tax. So whatever we have in this becomes our net operating income. Okay, so I'm just going to get this. This is supposed to be locked to the row. There's the timing. I'm just going to copy this one and bring it down here so that we have something for the timing. So we're going to just run this all through. This is going to be our total NOI, net operating income, which is going to be this, and we're going to have this on it. Okay, so now we have this. We can just copy it down here using our control, arrow, selecting it and then getting it this way. Okay, so you want to watch previous videos, because we treated a lot of shortcuts or keyboard shortcuts that we can use to actually speed up our modeling. So what happened here, let me just come this way. So what happened here was that selecting all of this, we just have to do shift and control, and then you do your right hand arrow button. So it comes like this. So everything is selected. So we can just do our control arrow, this time control letter arrow, and then it's going to copy everything out for us here. So what this is actually telling us, what is this EBITDA? So we don't need it to be bolded. So what this is actually telling us is that we actually made this amount of money and we spent as this, and then we get a balance here. So we're going to just take out the decimals here so that it will be uniform. So this is our net operating income for every month that comes in. Now, if we want to get, for example, we want to bring in other cash outflows that we have done, recall that we paid a debt. So we're going to take out, we're going to do some less debt repayment. So we're going to pay out our debt. I'm going to scroll to the section where we paid down our debt. So here is where we're paying down our debt. So we're just going to hit there and get the same format for it here. So once we copy it down this way, we're going to see where all our debt was paid. You get it? So if we sum it, we're going to see that it's a little bit above 2 million. That is because of the capitalization of interest during the construction period. That's why it is that high. So we have all of that here. And so what we just need to do is that we're going to sum it up so that from our net operating income, we take out this to get another total here. So I'm just going to bring this here and adjust the formula to do exactly what I wanted to do. So we could have done this, but I'm just going to separate them with a comma so that it takes just this and this. Okay, so we're going to just copy this to the end, and then we get the net. So we're getting the net. So this is what is remaining, you know, after debt repayment. So this is more or less the cash after debt repayment. All right, so that is it. Now let's see how all of this, what's this going to mean in coming out with our cash balance. So cash balance, our cash balance is going to be our NOI. So that's our net operating income. Sorry, before we do this, this will come here. So we'll have this as our opening balance. We'll have this as our opening balance. We have this one as cash inflows. This is going to be our major cash inflow. And then outflow would be our debt repayment. You get it? So outflows is going to be our debt repayment. The reason is because in our income statement, we have already taken care of interest. So we have this one coming in. We've already taken care of interest here. We've taken care of corporate tax to get this particular one. So this is going to be what is coming in, you know, and we have other things that we are taking out, which is the debt repayment. So we already know debt repayment is here. You get it. So this is debt repayment here. So what we're going to do is just come here. And then we're going to get our closing balance. Closing balance. Okay. This is the closing balance here. And so this already set up, our opening balance is going to be equal to whatever was in the previous period. And that's why we have this column to help us just look at the previous period where nothing was. And we're just going to use this format for it. We're going to use that format for it. Now for the closing balance, it's going to be the summation of our opening balance, whatever came in and whatever went out as debt repayment. So that is what it's going to be. And so we're going to have this here, and that gives us the opportunity to just, select everything down to the end, and control letter arrow is going to take this to the end. So what has happened here is that we got some money here, which was in our closing balance. After all operations and everything cost has been taken out, it became our opening balance here. You get it. And it continued like that. So what we're saying is that this became our opening balance. We got this one in, and then this became our closing balance. Now you might be asking, why are we not paying anything here? Remember that we had a moratorium for paying our principal. So that principal, we started paying it here. So this came in here, and then we got some cash inflow. We started paying our debt here, and then that brought about this balance. So it continues just like that, moving, and we're getting some. So this is called the corkscrew model that we have built. So if you do it this way, at any particular period, you are getting what the cash in hand would be, assuming all other things have been taken care of. So what that simply means is that by the end of this period, we should be having some 12.4 million, in our model, assuming what has been given us as inputs is what it really is. So you can see how we came about our, cash balance, so for our cash flow, we've been able to get in the inflows, the outflows, and determine the net cash flow. So this becomes the net cash flow by periods. Let's net cash flow by periods. Okay, so that's for that. Now, one other thing we might do, because here we've just done it month on month this way. How can we get it to be annual? Now, that's why it's good for you to, lay out your model, in a way that you can actually use it. Because what I'm just going to do, I'm just going to move this one. I'm going to create another copy, move it to the end, and create a copy, and then that's for this. Now I'm going to come here and change this one to annual. You get it? So this is going to be like our financial statements, our financial statements annual. Okay, so all right, so that becomes our annual. So what that means is that we had 4 years. So what I'm going to do is that I'm going to have just these 4 columns, and every other thing down to the end, I'm just going to delete everything. You get it? So it says the large operation, and okay, so I'm going to just try to get these things out one after the other. All right, so 4. Okay, so everything from here down to the end, I'm just going to delete it. Okay, so that's fine. So this is going to represent no longer months, but actually it's going to represent years. So not much of this will help us except the fiscal year. So we're going to just have the fiscal year representing whatever we want. So what I'm going to do is that I'm going to just come here, and then we're going to change some of these things here. Okay, so particularly we just want to, so I'm going to come here and just do this +1, such that it gives me the different years that there might be down to 2028. Let's check this place to be sure. Yes, down to 2028. All right, so so I already have that. I really do not need these flags again, and I really do not need any of these ones again. So they're not going to serve me any purpose. And actually, we could just take this out because they are not representing anything. And here also, we're going to just take them out. Take this, delete this. All right, so we now have the different years and we can link to them, lock the row and hit this and change this custom to general. So here we are, we're having each of these things here. So what we're going to do is to write formulas that are going to pull these things in right in here. So that's what we're going to do. So at this point, what we want to do is use the SUMIFS function, and we know that the SUMIFS function is meant to handle multiple criteria, but it can also handle single criteria. All right, so what I'm going to do is I'm going to come in to our financial statements monthly, and I'm going to take this for rent. So we're going to just take everything about it, and we're going to log the columns alone. Why? Because we want the rows to be relative. We're going to be copying it down, so we want it to be relative. So we're going to do this, and then we're just going to say this, and then we're going to the fiscal year. So we're going to use the fiscal year to do the summation. The fiscal year is going to pick all of this, and then we're also going to lock this. But this time around, we want to lock everything. We actually want to lock it to the rows and the columns, and so that we can be able to get our numbers accurate. We're locking the columns because we don't want it to shift from this exact columns, and we're locking the rows because even when we copy it down in the annual, we want it to still be looking at this row. So we're locking the both of them. So we're going to have something to tell us that, okay, when you're summing it, look at so and so here. So that's going to be the last criteria, because remember, that's your criteria 1. We've given the criteria range and we need a criteria. I'm just going to put a 0 here, hit my enter button. It's not going to give us anything yet. So until we link it to this cell, and while we link it to the cell, remember that we're going to be copying it down. So we need to lock the row here. So we just need to lock the row here. And now it should give us what we want. So you can see that in the first 12 months, the first year, we're not going to have anything on revenues, but we're going to have on just other years. Now, the good thing is that because the format of this sheet is same as the other one, we can actually take this and just paste it like this, and it's going to read fine. So we're going to just on this, and you can see that just doing this, it brings up all of this and takes care of them. So your model will just work fine, for all of this. So I'm going to just copy this and bring it here too, to just make sure we're doing the same and the right thing. Now, how do we check to see that it's doing the right thing? Sorry. So I'm going to come in here. I'm going to hold my control button down, and there is the button after letter P on your keyboard. So that's the square bracket. I'm just going to press that and then see where it comes to here. So it actually comes to corporate tax, indicating that we've done everything right. So that's it here. You can see we have our net operating income. Here it's a little above this because depreciation has been adjusted here, and then we have this. So now this is another interesting one, because why is it that we do not have debt repayment here? So we're going to do some adjustments to the cash flow. All of these are going to read quite fine because they will be looking at top here and they will be working just quite fine. But we're going to do on this debt repayment, you can see that it is just looking at workings and looking at a particular cell here. So it's not doing the right thing there. So we're going to come up here and pick this formula, and then we're going to bring it just right here so that it picks the total amount that we have done. So if I should do this, you can see that it is actually looking at debt repayments, and then it is bringing the value for each year. So it says that I paid this amount here, and I paid this amount, and completed the total amount that I'm supposed to pay back as debt repayment. So also we'll check for these ones and see what it's doing. So this one is going to be correct. So it's going to just be looking at what we had pulled out from here. And then this one is going to be looking here. And this is going to be looking at debt repayment. And then we have 12.4 here. So one way you can quickly check it is to look at what do you have right here. So you see 12.4 is what you have here, and you have this 12.4 here. So that completely tells us that we've gotten our financial statements for the annual periods. So that's going to be it for this video. In the next video, we'll be using these information to do our valuation. So we'll be doing our valuation somewhere around, and that will be the only thing that we need to do before we do scenario analysis. So we'll be covering everything here in the next video. So thank you very much for watching, and please if you love the video, just subscribe, like, share to others who might be interested in it. I very much appreciate that of you. And I'll see you in the next video. Thank you very much.